Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Charles River Laboratories International INC quarterly report. Charles River Laboratories International Inc. offers a diverse range of services to support the pharmaceutical industry. The company's businesses include research models and services, producing and selling research animals, providing insourcing solutions, and offering diagnostic services for research models, discovery and safety assessment, offering early discovery services, safety assessment services, and preclinical drug development, manufacturing solutions, providing in vitro testing methods for pharmaceuticals and consumer products, contract vivarium operation services, and specialized testing of biologics. Additionally, the company has strategic collaborations with various institutions to advance its research and development capabilities. These partnerships include Parker Institute for Cancer Immunotherapy, Children's Hospital Los Angeles, Francis Crick Institute, Crick, Inc. Valo Health through Logica platform. The stock price of Charles River Laboratories International, Inc. has dropped significantly over the past year due to several key news events. The most substantial decline occurred in April 2025, when the company's shares plummeted 28% over 2 days following the FDA's decision to phase out animal testing. This regulatory change directly impacts the company's core business model and raised concerns among investors about its future prospects. Other contributing factors include a weak revenue outlook, client contract termination, revised sales forecast, disappointing Q2 results, and a lackluster Q3 earnings update. These events have collectively led to significant declines in the stock price, with some days experiencing drops of over 28%, 12%, and 10%. The company's struggles to adapt to new testing methods, declining demand from biopharma clients, and increasing expenses have all contributed to its stock price decline. The primary drivers of revenue growth and decline are multifaceted. On the growth side, the increase in sales of research models and services, particularly Noveprim and within China, has been a significant contributor. Additionally, the growing demand for biologics and biosimilars has driven revenue expansion. The RMS segment has also seen revenue growth due to large research model product revenue. On the decline side, cautious client spending has led to decreases in sales of discovery products, DSA, and manufacturing businesses. Lower volume in the DSA segment and decreased demand for CDMO and biologics testing services have further contributed to revenue decline. Net income and profit margins decline in 2025. The financial performance of a company took a hit in 2025, with significant declines in both net income and profit margins. Net income plummeted by 44% from $239,038 in 2024 to $134,127 in 2025. This substantial decrease can be attributed to various factors. One major contributor was the increase in depreciation and amortization expenses, which rose by $65,398. Additionally, long-lived asset impairments increased by $18,846, further eroding net income. Other adjustments also had a negative impact on net income. Profit margins suffered as well, with operating income margin decreasing from 11.6% to 13.3%, and net income margin dropping from 7% to 5.5%. These declines indicate that the company's ability to generate profits has been compromised, likely due to increased expenses and decreased revenue. The company is indeed generating positive operating cash flow, as evident from the financial summary. The data on page 6 shows a steady increase in net cash provided by operating activities, with a notable jump of $14.9 million from 2024 to 2025. This upward trend indicates that the company's operations are generating sufficient cash to cover its expenses and investments, resulting in a positive operating cash flow. The company's debt level has shown a significant decrease over the past year. According to various financial reports, total debt decreased by approximately 2.3% from $2,258,995 to $2,198,769. Additionally, long-term debt decreased by $54,752 and total debt decreased from $2,214,948 to $2,165,472. Interest expenses have also seen a notable decline. the interest expense decreased by $14.8 million, 15.1%, from $98.4 million to $83.3 million, indicating a substantial reduction in the company's financial burden. Based on the financial summary, it appears that two segments performed well in terms of operating income, DSA and RMS. These segments showed a range of $123,153 to $126,436 and $34,553 to $27,544, respectively, for both Q3 and YTD. On the other hand, the manufacturing segment underperformed with relatively low operating income of $39,926 to $40,188 for Q3 and YTD. Management is optimistic about the company's outlook, citing several key strategies to drive growth and efficiency. The company aims to strengthen its core markets through acquisitions, partnerships, and internal investments, while also divesting underperforming assets to focus on high-growth areas. Additionally, management plans to explore new technologies to reduce reliance on animal testing and models, potentially mitigating regulatory risks. Overall, the company is positioning itself for long-term success by investing in its scientific portfolio and implementing cost-saving measures. Acquisitions and divestitures overview the company's financial activities, involve strategic decisions to acquire and divest various assets. Although no specific acquisitions are explicitly mentioned, the report indicates that the company has made strategic acquisitions in line with its business objectives. On the other hand, the company has engaged in several divestitures. Notably, a site in the DSA reportable segment was sold for $4 million. Additionally, the company has divested certain underperforming or non-core assets to optimize its portfolio and focus on core operations. The company's financial summary reveals that it has engaged in two key shareholder return initiatives. Firstly, the company paid dividends to its shareholders in 2024, demonstrating a commitment to rewarding investors through cash distributions. Secondly, the company has also undertaken share buybacks in both 2024 and 2025, utilizing excess capital to repurchase outstanding shares from the market. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights two significant concerns that may impact its operations. Firstly, there are concerns about inventory buildup, with multiple references to this issue on pages 29, 42, and 49 of the report. This suggests a potential problem in managing inventory levels. Furthermore, supply chain disruption is also a concern, driven by various factors such as tariffs between major trading partners, pages 41 and 54, cautious client spending leading to revenue declines, page 42, and investigations into non-human primate supply chains, page 47. These issues have the potential to disrupt the company's supply chain operations. That concludes the financial summary for Charles River Laboratories International Inc. Feel free to comment below, and I will be happy to answer them when possible.